I'm doing raffles now on the live streams,
Oh, right. What's
like
the?
I did at Mathnasium.
Is there prizes?
Yeah, $20 Amazon gift card.
Wow.
I give two per raffle.
Do you do? I know there's comment bots that you can do. Do you do those?
What's that?
Well, there's like you can look through comments, um, and like
Oh,
there's a website that you do. You just put in your YouTube and then
like
it'll.
sort the
Right.
like randomly choose a comment.
Yeah, but the thing is, some people like to spam. Like they'll put in like 30 comments so they win.
Yeah, I did that a lot on my old channel. Hey everybody, welcome to the live stream. So I usually do it Saturday at 6 p.m. But this Saturday is Christmas, and the following Saturday is New Year. So I'll probably just do it Tuesdays, just for this week and next week. Udar, what's up? Thanks for coming. And I started this last live stream. I'm doing raffles, so I usually do twice. Manoli, Matthew, what's up? So I'm gonna do 2 raffles, and you get $20 Amazon gift card. I don't really do options too much. I do I've done them before. I'd rather just buy the stock or sell the stock. I don't really see the value with options usually.
Yeah, they're risky.
If you get it right, I guess you can. Jane asks, "What's up?" You're my idol for saying that. So I put like the way the raffle works is you have to get picked twice to win, and I'll email you the Amazon gift card. And 2 people won last week, and I emailed to them. The first person who gets picked twice wins. I put a note. Comment on other YouTube channels and just say you should do a live stream with Scott's Stock Due Diligence. Mention that in the comments to other finance YouTube channels, so I get more people to co-host. It's hard to find people.
Should I introduce myself a little bit?
Oh yeah, I forgot you're here. My friend Ben is. What do you mean? What's my background? My background is just a beige wall. My background. I know. Ben, you wanna?
Yeah.
Talk about your background. What's behind you?
I'm not a YouTuber. But what's behind me used to be Scott's. This is his business. I'm sure he said a lot about him selling it. And so right now I was a student for him at his business for maybe 5 years or maybe 6 years. Thank you, Otacon. And I've been working for him for around 2.5. I've known him for a long time. He's a great guy, I'll tell you. And I'm here. I'm tuning in. I'm finally able to be on live stream. Ever since the first time he was making videos, I was telling him about it. I don't have a channel, Udar. I'm sorry. Maybe I could start one.
I've known Ben since he was I think 12 years old, when he was a student at my center, and then I hired him, and hopefully I hope maybe if anybody's watching and they want to like work with me, maybe you can help me with my channel, and I could pay you like maybe $100,000 a year if you can help me with my channel.
It's a big salary.
That's all I can pay is $100,000 a year plus a $100,000 bonus, and then you'll learn about finance. Asmin, what's up? But as the channel grows and I get more subs and viewers, I can do more raffles. Because on my last channel, I gave away like probably like $10,000. Ben's a high school student.
Yeah.
So you're
I
probably
have
more
taken,
passive, right, investor?
kind of. I do. I do invest. I got that idea from Scott, and that's how I got into it. And yeah, like you said, I'm a bit passive. I just do index funds and all that. I have some risky. I did a couple risky trades, but those
Can
did
you
not work.
talk up more, or is it too hard
So
there?
a little hard. I did a couple risky trades, but that didn't turn out well for me. So
It
I
does.
don't
It
think
never
too much.
does.
Yeah.
That's why people say, "Why do you take more risks? Why do you buy penny stocks? Why do you do this?" You know why? Because you don't make money that way. If you keep trying to chase the dream and try to win a lotto, you're never going to make money, and you're going to always be struggling. You just got to build up little by little, by little. You know, me it took me until I was 30 just to even get $100,000 in invest. You know, it took about 10 years of working. But then once you hit that certain point, like you get 10,000, it grows faster, and then 50,000, it grows faster. But you can't take these big risks and try to win on a penny stock. It's never going to happen.
Yeah. Could I tell us a little story about one of my friends? It's actually in here. Um, can I do that?
Yeah. Yeah.
So
Whatever you want.
one of his trades is he he lost a little bit of money on some weed stocks, right? Penny stock, like things like that. Um, and so what he did is he put a lot of money into this one company called Oyster Pharmaceuticals, and they do I think skincare products. And he purchased a lot right before um, before they announced FDA approval, and it got approved. And so I think he may have bought a little high, but he also bought a little low. He bought two times, and so I think he's made a ton of money recently because if you look at, I think the ticker's OYST. Um,
OYST.
OYST.
He made a lot of money. Really?
Well, I don't know about in total, but I know recently, like because if you look at that,
$16?
yeah, it's a I think it's a micro. What is the market cap of it? Four
I mean,
hundred.
where did he buy? I mean, he couldn't have bought that low. It was never,
Well, he told me that he may have bought he bought a
unless
little
he
bit.
got it right here and sold up here. But it was never really below 15.
Right, but he told me that he purchased a little bit like when it was in the low tens, and then he also purchased a little higher when it was in around like the 20s. But if you just look at like in the past month or so, it's been very volatile, and so it's done well for him. And it's funny. The other
Yeah, I
thing
guess
I did,
you could have got it down here.
yeah, the one I want to say is I know I may have mentioned this to you, Scott, is ASTS, the space one. Um, and that one, it's it's the reason why, or the reason why I bought it is because the theory is there's like T-Mobile and Verizon, those use cell towers, and it's AST Space Mobile. Um, ASTS is the ticker, and it does it does like space stuff, and it's like a very small. I bought it at $13. I bought a lot of it at $13. And I thought that was going somewhere, but I've lost like a third of my money, and so that was my riskiest stock. And looking at the chat, Microsoft, I bought Microsoft right before earnings, and so I made at one point I think like up 13% on that. So I've
Yeah,
learned a little bit of a lesson.
it's okay to invest in risky stuff, but it's got to be a small percentage. But the problem is, people never sell at the right time. They always if it goes down, they get so scared and they might sell at a loss because they don't want to lose all the money. And if it goes up, they sell way before it gets to a high point because they see like a 20% return. So it's like people never sell the right time. It's hard to do that, but that's
Yeah.
why you try to pick good companies and hold.
I
What SPAC
want
are you
to.
talking about?
Well, I think the one you're talking about is mine. It was a SPAC. But I
Oh,
want to bring up, go to your point about people never sell at the right time. I had a friend who his friend told him, this was he's a lot older, and he put $1,000 into this penny stock because it was an oil rig. You know, they're in the Middle East. They're finding oil, and it was a very risky one. And he put $1,000 into it, and it was trading at like 70 cents. So not immediately. After a little bit, it went down to 50 cents. And so he's like, oh, I got to get out before I lose a bunch. And so he sold all of it, right? And that was maybe like 10 years ago or 5 years ago. Today, that company, I don't remember the name of it, but it's worth, I think, over $100. So he could have, 1,000x his money.
wow. Hey, Dave, thanks for being a member. Yeah, I thousand. Well, I never 1000x. I 10x on a stock.
Which one was that?
I don't. You probably never heard of the company Apple.
Oh, really? Oh, I want to. I would say my parents, they purchased a bunch before they split, and in total, I don't know how much they put in. I think they put in like.
Your parents split?
No. They bought a bunch of Apple before Apple split, and they put in I think like 50K, and in total they made 200 grand off of it, and they're still
Yeah,
holding to this day. It's crazy.
that's awesome. You just keep holding those stocks.
Yeah.
You know, I didn't have that much money even 10 years ago, so I put 1,500 into. This was almost 20 years ago when I actually bought it. I put 1,500 into Apple. It turned into 15,000, which was nice.
Did you
So
sell?
right, I only sell when I need money. Like when I opened a business, I sold a lot of my stock, and when I paid down my house, I sold a lot of stock. But if I don't need money, I generally don't sell. If you want to be part of Raffles, just say I'm in or in or something like that. So I know you're in a raffle, and I'll write your name, Dave RT. Right, I'm in because I'm at DW. Some people, I don't know that you're here unless you commented. Hi there, guys. TV. And Ben, you can keep talking if you want. Is your friend here?
Yeah, he was earlier. I think he's still in here. I think he's down overall because he put a lot of money into all of his money into weed penny stocks and Canadian ones, and so that went down a lot. But no, I wanted to bring that story up because recently it was pretty funny because he's my age, and I'm kind of the passive one. He wants to do options, but I don't think his parents allow him. I don't think he's allowed to. And I was telling him like, dude, you're gonna lose all your money. You're gonna end up on Wall Street Bets on the loss section. And he's like, no, trust me, dude. Balls to the wall play. It'll make me rich.
Yeah, Ed A to Z. Well, the DCF is maybe like 10% of my analysis. It's a good starting point. It's kind of like looking at ratios like PE, price of sales. Like just find something that you're comfortable with looking at that you could rely on. Like maybe as simple as just looking at the cash flow, and then you could weed out maybe some of the stocks that you think are losers, and then but it's really hard for me to explain like how I look at stocks because it's kind of like more psychological. I show you the numbers, but a lot of it is based on like just how I see the market, and it's hard to even explain like how I see the market moving. If I think it's a really bearish market or bullish market. If I think it's really bearish, I probably won't do much. Like I haven't done that much lately. for a few years. I always buy, but I might just buy something really like the S&P 500.
Yeah, I remember watching your portfolio review. I think it was at 20K, and you mentioned you showed all these different companies, and they all did really well. But you mentioned that with all of your losses and gains totaled, if you had just put all that money into the S&P, you would have outperformed what you had then.
Right. Like, even if you know everything in the world, you can't predict the future. Most people won't beat the S&P. But it's fun learning this stuff. And if you do identify a really undervalued stock, it's a good feeling. And then you kind of build that, your knowledge base grows, and then you move closer to the point where you start to really make consistent money. But it takes time. But it's hard. You have to like predict the future of like a company or an industry, and it's hard to do. Like, if you were really in tune, like, and you like that one guy who saw COVID coming and he shorted the market. Like, if you can identify that. But the problem is, even if you identify a company, most people just sell way before they should. Like, they'll sell after a month because it doesn't move or it's going down. But sometimes you have to wait like a year or two. So the way it works is you have to win. You get picked twice to win. And so I have a randomizer. It's between 1 and 11, the numbers. So let me know if you're not on the thing. So every time I kind of change something on the screen, this number changes.
We have 14 people or 15 people in here when I only see 11 names. So free
So
chance
you can
to
say, I'll put you in there. So you could say I'm in. Okay, but you can't get 2 in a row. If it lands on the same number twice, you can't get 2 in a row. It has to change. But you'll see how it works. Okay, so I'm gonna. This is the randomizer right here. This is just number of slots. This is the randomizer. So ready? This is the first one.
It's for a $20 gift
Okay.
card.
Nothing changed. That was weird. Okay, 4. So Matthew Plummer got picked, but he didn't win. You have to get picked twice to win. A $20 Amazon gift card. And as I grow my channel, that doesn't count. As I grow my channel, I can start giving away more, like Mr. Beast. Oh, now I'm gonna change it. Ready? 6. Okay, so look at the green number. 3. I have to update the number here to 13. 3 just won. That didn't count because I was changing. So ready? I'm gonna do another change. 6. It's over.
Oh, they won.
Is that your friend, Coco?
No. Coco Butterboy, I think is the name. They won.
So Coco, just email me and I'll send you the $20 Amazon gift card. We'll do another one later. I'll try to do 2 per stream. So you see how it works? I just keep changing it. Last time almost everybody got picked once. It was crazy, and then eventually somebody got the second one. I used to do this at my business too. I used to give away thousands of dollars. Oh, Arvin. So yeah, I was saying dilution. I know. No way, seriously, didn't expect that. Yeah, nice job. So I know if you ever watch other channels, they go, if they're diluting their shares, that's bad. That's really bad. Don't buy the stock. And I get why they say that, but that's why they went public. That's why they sold stock in the first place. No, it wasn't for Waiter.
Did Waiter dilute recently?
I think they did raise capital. I'm down a lot in that investment, and I
Okay.
regret it. Like I should just stick with my strategy, and I deviated because I felt like I had to take more risks because people were saying you got to take more risks. Always
I mean, it's
invest in
only been
something.
it's only been how long? Like a couple months, 3 months?
Yeah, but I was up so much right away. So, but whatever. I'm gonna see how it goes. I'm not selling.
Yeah. You could have bought a little higher, and that you would have been down even more. So.
But I wanted to get at 80 cents. When I identified the stock, it was 80 cents. And then as soon as I went to buy, Morgan Stanley said bought a lot. So the stock went up to $1.19. I got $1.19.
It's at 83 right now, I think.
If your business is worth $100 million, say that's the value of your business. You could say that's the market cap. If it's a private company, that's the value of your company. So $100 million. Say you just own 100% of the company, just to keep it easy. So the annual cash flow, that's how much money the business generates. Let's just say it was it was 10 million. So the business generates roughly a 10% return, right? That's your return, and it may fluctuate year to year. But what if you you wanted to grow the business, so you found an investor, and he said, yeah, I'll give you $100 million, and we'll be 50-50 partners, right? So if you okay, so only you.
Is this private? Like, is the company IPOing, or is this someone?
It could be anything. You could say it's a public company, private company. I'm just trying to just give you an example of why diluting. I'm not saying it's good to dilute. I'm not saying it's bad. Nothing's good or bad. You have to always look at more things. So you find an investor who says, okay, yeah, I'll give you $100 million for the company, and we'll split it with 50-50. So now it's you plus one. So since he's giving you $100 million for half the company, your company now has to be worth $200 million. That's a new valuation. Kind of like a home. The value of the home is meaningless. Whatever somebody pays for the home, that's the value of the home. Doesn't matter if you think the value of the home is $1 million. If the most someone's willing to pay is $800,000, then that's the value of the home, $800,000. And say now you have 20 million of cash flow. So you and your partner get 10 million each. So nothing changed, right? It was the same. That's case one. But what if the person gave you $100 million to split the company, and the cash flow, like pretend case one never happened, I'm saying, if the person gave you $100 million to split the company, Now you have $100 million. Now you could buy more factories. You can get more employees. You can whatever your company does. You can invest back into your company to grow it. If you generated 30 million cash flow, of course, now it was a great idea to dilute yourself, because now you're making $15 million instead of $10 million, right? So that was great. You diluted yourself. In case 3, pretend 1 and 2 never happened. Somebody gave you $100 million, 50-50 partners, and now your cash flow is 16 million. So instead of 10 million, you now are bringing in 6 million more of cash flow, right? But you're actually making less because you have to split it with somebody. So now you're making 8 million with the new company, with the diluted company, instead of 10 million. So this was bad, right? So
But doesn't the company receives more? So if you were smart with your money and you reinvested it with the company would over time grow, and therefore you wouldn't get a higher return rate, but you would get more if the company grows.
So if you had the company by yourself, $100 million company, you had a $10 million return in your annual return was 10 million. So it was 10% return on investment. If you diluted yourself in that case 1, same result, whether you ran it by yourself or with this partner, the same exact result, you're bringing in $10 million. In case 2, it's better. The fact that you diluted yourself, it helped you grow your business, maybe become more efficient. Maybe now, instead of buying, say you bought a million products for $1 each, now you get 2 million for 75 cents each. So you're more efficient, economies of scale. Or you can do a case 3 where you're worse off. Maybe you and a new owner kind of butt heads. He's taking a company in a different direction. So all I'm saying is, if there's dilution, or even if there's opposite dilution, if the company buys back stock, so if they do something anti-dilutive, you have to just look at the before and after. You may be better off. If it was case 2, the dilution, you should be happy you were diluted, because now you're making $5 million more a year. So you just don't know the result. I'm just saying, I wouldn't say it's good or bad. You might, as an investor, you may have to identify if they're saying we're going to raise $50 million. They'll probably talk about what they're going to do with the money. If it's to pay down debt or to pay a dividend, maybe that's not the best use of cash. If they have an opportunity to grow in another country, to start selling their product in another country, so it's just, there's no good or bad for anything. You just have to kind of try to look under the hood and figure it out. It's really hard to do, because I usually wouldn't have a clue. Is this good dilution or bad dilution? But maybe over time you start to understand these things better. And if it's a company that every time they dilute themselves, they end up growing more, so you just trust them. And other companies are not good with money, and they end up, sometimes the money from new stock goes into things like paying debt. So a greater number of shares divided by the same profit. This ends up not improving the stock. I mean, that's probably not the best use of dilution, paying debt, but you do benefit by not paying debt. Pretend you had a business. Always think of it as one business. Don't think of it as like you're one millionth of a owner. Think of it the business as a whole. If you owned a business, and we could use smaller numbers. If your business was worth $100,000 and you ran into some difficulty because COVID, maybe you owned a restaurant, you had to shut down for a while. Maybe a friend said, you know what, I'll put $50,000 in the business, make me a partner, and you need that money to pay down debt. Say your bills are due. These things happen. The worst situation is the company just goes bankrupt and everybody loses all their money. You don't want that to happen. If they need to pay down debt, that could be an option just to get through a difficult time.
I have a question about dilution. Are companies legally required, public companies legally required to announce when they are diluting shareholders or issuing more shares?
I think they have to announce it. So if you look through the 8Ks, you'll see. But if you look on the 10K, it always it'll say the maximum number of shares a company can sell into the market, and they're usually way below it. Like you may see like company with like
they have to own
100 million shares outstanding. If you look on a 10K or their prospectus, you might see like they can issue up to like 10 billion. It's usually like they usually have a lot of room to dilute. So people complain when companies dilute their shareholders. They complain, oh, I don't want to be diluted. And then when a company buys back stock, they complain, I don't want you to waste your money buying back stock. Use it to grow the business. So people are going to complain no matter what, because they think by complaining, it shows they understand things. I don't know if that makes sense, but just if you invest in a company, you have to give them the right to do whatever they want with the company because you're trusting them with your money. If you don't feel comfortable with the management, just don't invest with them. When I give a company my money, I give them the right to do what they want. If they want to like pay themselves a big bonus, that's what they're going to do. If they want to open up new factories, if they want to acquire another company, if they don't want to grow organically for a while, they want to become more efficient, whatever it is. I mean, you have to trust that they're going to do it for the right reasons. So I know the reason other channels say dilution is bad is just it gives you like kind of a hard thing to say, where it shows your viewers that like you have a kind of something to look for. Like if you see dilution, don't buy the stock. If you see insider selling, don't buy the stock. If you see, it just gives you kind of like but it's never that way. It's never black and white like that with anything. What's your macro picture of 22? I mean, I'm not that comfortable with the market. Not the market, but I'm just not comfortable with the economy as a whole for a while. It just seems like just the amount of debt and with COVID now, it just seems like there's so many issues. I do think the American companies are really strong, a lot stronger than they were in 2001. So I don't think if there is a market crash like in March 2020, it'll probably come up pretty quickly. Maybe not as quick as March 2020, which was ridiculous. Maybe it'll take a year or a little longer, but I think companies are making money. They're strong for the most part. Obviously there's going to be crappy companies, but in 2001, there was just so many garbage companies that were worth so much money that never made a. Hey, Brian, what's up? Brian sent. That's a hard name to say.
Yeah, hard names to pronounce.
Sentirahan. Sentilrahan. Is that how you say it? Sentilrahan. Mark Anthony. Any red flags for stocks? What do you mean red flags for stocks? You mean things to look for or to avoid? I mean, it's pretty much, like I said, there's pretty much nothing's going to be black and white. Because like you could say, don't ever invest in a company that has a lot of insider selling. What if you see like Apple? I mean, there could be not with a mature company, maybe a new company that insiders like legally can sell until a certain time frame, maybe say 6 months after they IPO or 1 year after the stock vests. So you see a lot of insider selling. So you think the company's going under, but like some people have worked at these companies for 10, 15 years or before they IPO'd, and some of them put money into the company. So if you were that person, you put so much time and money and you have a family and you never really got much of a paycheck because you're trying to grow the company, wouldn't you want to cash out? Like not sell everything and run, but like at least take some money. Santilrajan.
You're close, I think.
The thing is, when you see people selling, you don't really know the reason why they're selling. They may be selling because they want to pay off their mortgage, or they want to fund their college kids, or now they have the ability to sell because they passed that grace period. So you never really know why people are selling. They could they really think the company's going to go under. I mean, that could be a reason too. But when people buy, you know why they're buying. People don't buy unless they think the stock's going to go up. They're not buying to kind of fool you to think, okay, if I buy, I'm going to fool the investors. So pretty much we know the reason people buy because they're bullish. When they sell, we don't know the reason. It could be a million things.
What do you think about companies that are very strong but overvalued? For example, well, I don't have any examples, but if there's a company you've been following and you really like it, but it's very expensive right now, whether that's PE, whether that's just price in general, market cap. What do you do with that? Do you buy? Do you watch it? Do you wait for the dip?
I generally look. Oh, Accelera went up 8% today. I don't sit on cash. Like I don't usually have much cash. You know, I have enough to pay my bills and things like that, but I don't sit on like hundreds of thousands of dollars of cash. I sit on like 10, 20,000 just so I have money in case something happens. But when I get money, I invest it all pretty much right away. I don't wait. But if there's a stock I like, a company I like, but it's overvalued, I just won't buy it. And when I have the money, I just won't buy it. Maybe I'll sell some of my other stock if I see a stock I really like that's now undervalued. Maybe I'll sell some of my spiders.
So I assume that when you say that, you mean like if you get any money, any extra money to invest, you would automatically put that into indexes. Do you have a favorite index?
No, I would look. Like last time I had money, which was a while ago, I had $10,000 extra. I bought Accelera. If there's nothing I like, I'll buy indexes. But when I have money, I look at what's out there. If I see of the 10, 20 stocks I follow, if I see they're all overvalued, I just put it into index. But if I see a couple that look good, then I'll buy those stocks. I rarely sell stocks unless like there's a stock I love and it's come down a lot, like Alibaba, but I'm still not buying it because I'm just scared. But it's so undervalued.
Well, yeah. I was thinking about that. I believe last week.
Ben, keep talking. I'll be back in 2 minutes.
I was thinking about Alibaba either I think a couple weeks ago, and that was after earnings, and they had really bad. I don't know if I'd say really bad earnings. They had they didn't beat estimates, and so because of that, the stock went down a bunch. I think like 10%. And right there, I was thinking, man, I should pick some of this stock up. And then another, a week later, I believe recently, let's see. Well, today it was up, what, 7%, but usually, like, there was a huge dip earlier from, uh, let's see, there's just a huge dip with Alibaba. And so I am a little scared. And as some of you are saying, Chinese companies are they're a little bit risky because you don't know what's going on. Right? They don't follow the American market, for example. If there's, with Omicron, like, for example, like looking at December 20th, right? There's a huge, what is that, like a 4%, and then from the 20th down to from the 17th to 20th, it's down, 7%.
Everybody left. What happened? I walk away and everybody leaves. No, I'm joking. It's the same number.
Yeah. And so, like I was saying, it's a little bit different with Chinese companies because, um, especially if you live in America, you're able to follow with the news what's going on in America. And some companies will follow just the general market, but in China, there's just a lot more political uncertainty, and so therefore, people.
That's the only reason people aren't buying it, because of China. Let me just about dilution. And if you own a business, always just think of it as like one whole business. Don't think of it as, if you own a business, obviously you have expenses, lots of different expenses. You might have to pay rent. You have to pay employees. Some expenses may be really huge. Maybe your electric bill is not really even you could maybe even ignore that if it's like $50 a month out of everything. But payroll may be 20% of your business, so that might be a big expense. But every time you spend money, regardless of what it is, every time you spend money, whether it's on rent, it's on employee, whether you buy food for the fridge so your employees can eat, every expense is diluting the shareholders. Every single time you spend money, even if you're spending money that results in revenue, you're still diluting every dollar you spend. So at what point do you say, instead of having 100 employees, let's have 90 employees because we're wasting cash, we're wasting money? Or maybe the rent in this place is like $10,000 a month, and we don't even need this big space. We could get it for $5,000 a month. So every single time you spend money, it's diluting. So why is raising capital so bad? What if you cut some expenses? That's the same exact thing. Say you had a small $100,000 business, and if your cousin said, "I'll give you $10,000, I'll be an investor in your business," and you say, "Oh, great, I'll give you 10% of whatever I get." Alternatively, you could just cut $10,000 of expenses. The same exact result, right? Whether you take in a new investor or you cut $10,000 of expenses.
Yeah, I think
you have $10,000 extra that hits the bottom line. So you may think, well, you need to spend money. You need to spend money because it's a business, and you have to grow the business. You need these things in order to make revenue. I don't know. Maybe you don't need. Maybe there's certain employees you just don't need. Maybe it's a waste. Like I said, you could find scenarios. So, I don't know if that makes sense, but like people complain about dilution. You could say that about every single thing they spend money on. It's all diluting you. Everything they spend is diluting you.
I think that's a great point. And I think one of the main reasons why people have such an issue against diluting by issuing more shares rather than diluting by investing back into the company is they don't really care whether the company spends $1,000 or $10,000 on itself every day, every week, whatever.
They don't care. Yeah, exactly.
But if they do issue more shares, they know that the share price is guaranteed to have higher supply. So therefore, a somewhat lower price, assuming that the demand stays the same. And so because of that, people think that it affects them, and it does. But at the same time, people don't get any expense. Like if the company spends $1,000 on developing new technology, they don't care. They wouldn't have a comment on that. But if they issue more shares,
Exactly.
then it's a problem for them because it directly affects them. Whereas that new technology, that money that's being spent, could result in a huge discovery, and then that can make that company a lot more. And they wouldn't say anything about diluting by adding a research team to the company.
Exactly. Because it's very, you could kind of identify it. You can say, this is why the stock's going down. They diluted you. And then it gives you kind of like a landmark. It would be just a lot easier for me to say, like, don't invest in these companies that dilute you, because it gives you something to kind of hang on to and say, like, yes, Scott said that, and it makes sense to me, that dilution thing. So it'd be so much easier for me to just say that. But yeah, you could have a company, like Ben said, they're spending this, say you're a $200 million company, say they were spending 30 million in R&D. Say it was a technology company, they're spending 30 million on R&D, so they're paying all these employees, these like really expensive doctors and scientists, to come up with these new creations, and maybe it doesn't even, you didn't even see much of a return, because you were going to come up with a similar technology whether you hired these really expensive doctors or not. So if you cut it down to 20 million instead of 30 million paying those people, it's the same thing. It's all expenses, but you don't see it. There's no way for you to say you shouldn't be spending this much on R&D. You can't, because you can't, like, there's no way for you to figure that out or justify it anyway. But you can say, you're diluting me. That's not fair. But it has been over a year. Oh, VMware? I'll add VMware to the queue. I think that's a good one, VMware.
Yeah, actually, I think I use that myself, and that's something that I like to do. You know, if you're not sure what to buy and you're interested in companies, is think about what you use every day, and that's a huge part of looking for companies. Just what you use every day and what you spend your money on.
Yeah, Warren, you should be a co-host. You seem to really understand things. Yeah, Warren's making a lot of good points. Like, there's so much going on with the company, so it's really hard to tell. But like, if you can like look at like 2019 for a company and say, okay, I mean, this is really how you're supposed to do it. But say you look in 2019, and they had keep it easy, 1 million shares. And then you looked at 2020. And they had 2 million shares. You'd say, wow, they doubled the shares. That stinks, because now my value is worth less. But look at the free cash flow. If the free cash flow went from 10,000 to 100,000, they were only getting a 1% return. Now they're getting a 5% return. They added a ton of value. There's a lot of other things. That's a really high level way to think about it, but there's a million other things also you have to look at as well. But that's a really simplified approach. Like, the fact that they're diluting me, it may have helped a lot. This is a fake company, this 1 million shares. It's not a real company. But the same thing, when they buy back stock, people still complain. you should be growing a company, not buying back your stock. Because the people who complain about dilution, they should love buybacks, because it's the exact opposite. And
Right.
usually people, what's that?
And it's good for them. It's like you said, the exact opposite. They're guaranteed to lose value in that company if they dilute shareholders, but if they buy back, then they're guaranteed to increase in value. And for some reason, they hate it.
But it's easy to latch onto those things, and just, it's kind of like propaganda, like how Hitler did it. If you just like have these small concrete messages that people could latch onto, then they'll start listening to you, and they'll be like, yeah, he's right. Dilution is bad. Buybacks are good. It just makes it more confusing, my approach, because it's not straightforward. But it just, what are the videos you're doing next, Scott? Well, I can show you. I have 4 in the queue. I stopped working on December 1st. I kind of retired. I don't know if it's for good, but so I had a little more time to do these videos. Luminar is tomorrow. Vici, that's a REIT. Tellurian and Merck. Those are the next 4 days, already done, the videos. Does anybody like my new? Of course, every time I make a change to formatting, somebody complains. Go back to the original thing. Let me see. Like, what did I do? Well, the opening is different now. It's not too. Yeah, Luminar.
To my channel, I'm Scott, and in this video, I am going to walk you through the process of valuing Merck's stock,
I have this.
analyzing their financial statements and dissecting their financial ratios. So we keep getting really high, mainly because of all the challenges with COVID.
Every time I switch, it makes a noise.
Developing vaccines and keeping us safe. But for some reason, most of these pharmaceutical stocks are down the past 52 weeks. They have a low beta.
Does anybody notice that? Like that noise?
Half the market. It's not too volatile. It's flat the last 52 weeks, while the S&P is up 25%. The 52-week low is 68. The high is 91. And the stock is trading below its 50-day and 200-day moving average. This is a really popular stock. 17 million shares.
I guess it's not much.
All the shares outstanding are on float. 75% are held by institutions, and less than 1% of the.
I guess it's not much of a difference. I just try to add some more effects and make it look more professional. Bristol Myers Squibb is a good pharma company. You know, I thought pharmaceutical stocks are the best thing to buy now because of COVID and how, important it is to find vaccines and how things are getting worse. But they keep going down. Like, all the pharmaceutical stocks are going down. I don't understand why. I was thinking of like AstraZeneca.
I'd recommend
That's up.
Affirm.
Not
I'd
much.
recommend an index for pharmaceuticals. One I'm looking at is XLV. It's like the spider for it.
What's it called?
XLV. It's healthcare sector, select sector, spider funds. And that it's slowly been going up and down.
Maybe I'll do that, because I'm looking to do pharmaceuticals, and I'm having a hard time picking one.
Right. Well, this one, it's just an index. It's not an actual company, but they've been able to maintain some.
Neil, what are you talking about? What do we miss? What do you? I don't. that's the thing. They're so risky. There's so many. That's why what Ben said is a good idea. You can invest in it in this index, and has Johnson & Johnson, United Health, Pfizer, Abbott Labs. Because I'm like going through all these pharmaceutical companies. I'm like, every time I find one, I'm like, okay, I'm going to put my money to this company. Then I'm like, I don't know, and I keep going back and forth.
Right, and I think that's the benefit of indexes. If one company tanks and another one succeeds, it works out for you because there's so many, and like you said, they a lot of the popular ones keep going down. I haven't taken a look at Johnson & Johnson or Moderna or anything like that recently, but I know that they're not going up a ton compared to how much they're spending in the vaccine information output. But yeah, so that's why I'd recommend just indexes. It doesn't have to be a specific one. I'm actually not investing in this one. I'm thinking about it, but I would just say in general indexes for healthcare.
XLV. I'm gonna write that down so I don't forget, because it's like there's so many stocks that I'm like, oh, this stock, that stock. It's so confusing. Like, so don't think you're alone with trying to figure this stuff out. And I was so bullish Nokia, and I'm like, okay, this is so undervalued.
Well, I think it's gonna take a couple years if it does pop. I remember from your video you're saying that the CEO said it's going to be negative in terms of net income for the next couple of years. So I wouldn't expect it to do anything in the next, at least for a year or so, and then maybe we might see an increase in revenue.
Yeah, it's Splunk. I forgot about this company. Splunk.
I've actually never heard of it. What does the company do?
Yeah, I can't remember what they do again.
Oh, is it a TV thing? It looks like
software company. That's the thing too. There's so many software companies. It's which one?
Yeah, well, that's what everyone thinks the future. The reason why there's so many and why there's huge.
18 billion. It's a big market cap.
Yeah, that's what everyone thinks is the future. So everyone's looking to get in early.
Yeah. CrowdStrike. That's a good one.
What are your thoughts on DraftKings?
I don't like. I don't invest in those gambling, cannabis, tobacco. They just don't seem to have upward momentum, even though they're usually, a lot of them make a lot of money and they're good companies, but like, you need the backing of a financial institution like a Morgan Stanley. They need to, because that's how stocks generally go up, is these big funds that buy like hundreds of millions of shares at one shot. And if you don't have that backing, you don't have, like cannabis stocks, a lot of funds just won't buy it because it's not looked upon like, it's not like a positive for the environment, or not the environment, just like for health, right, for people. It's tough. It's confusing because sometimes you do all that research and you convince yourself, but then the stock never moves. Wow, Cloudflare, 9%.
What about Cisco? I've heard a lot of bullish things on Cisco, but I haven't seen any movement.
The tech company or the food company? Probably the tech company, right?
Yeah.
Do you know
I think it's.
You know the Cisco?
I think
food
it's like
company?
a C.
Yeah, no, but.
Oh.
Are you familiar with Cisco?
No, not the food one.
The food company. It's a pretty big company. Cisco's a great company. I think the safest thing, just to stick with market caps above 100 billion. I think that's a safe way to go about things. Who uses Discord? I have a lot of people. I don't even know how to use it. I don't even know what to do.
If you want to create a Discord, I can create one for you. I'll make you the boss of it, the whatever owner.
No, I have a Discord. I just set up yesterday.
Is it for the public? Is it for everyone?
I guess so. I just set it up. I didn't really make it private or anything.
Well, I think you have to have the link to join it if you want to. I don't know.
I send a link out on my channel. I did a post earlier today with the Discord link.
Oh, I didn't see that.
Who wants to do another raffle? Do you want to do like? I hope the channel could grow, so I can do like $1,000 raffle. Just say I'm in if you want to be part of the raffle. Mark.
I don't see very many other YouTubers doing raffles like this for anyone. You could be the Mr. Beast of stock YouTube.
That's what makes it fun, hopefully. And just all I ask is, on other finance YouTubers, just write comments saying you should live stream with Scott's stock due diligence. He does live streams with other YouTubers, and it's a good way to get subs. Something like that. You have to get picked twice to win whoever gets.
I think it's great. I think you're supporting people who are in here. A lot of people tune into the live streams, and at least for me, I'm glad you do it. They're very entertaining, and it's great to give back to the people watching.
Are you reading something, or are you saying that for yourself?
No, I'm saying that.
On my old channel, I used to do it was scratching lotto tickets. I used to do lots of giveaways, like thousands of dollars of giveaways on that. But then people try to scam me because they would email me and say, "Oh, I won on your raffle," even though they didn't win. And then I have a way to figure out if you win. There's a way to check if it's actually you. So don't try to scam me. I mean, you could try, but it won't work.
You could do you could have you could do a poll, and you could have other people choose companies. You could do like options tradings, just a small amount, but you have other people decide what you buy, and whichever one gets the most votes.
You don't get confused, LX, with the free cash flow thing. It's just well, the valuation part is really challenging, but just try to understand what free cash flow is. Just try to understand really high level what is free cash flow, what is net income, what is operating cash flow. People think, oh, net income, that's how much money the company made. That's a profit. No, that's not really. That's accounting profits. So you could actually lose a ton of cash and have profits. Okay, so I have 12 people in here, or 10 people. So the way it works is, here's the randomizer. Let me make this smaller so it doesn't count yet. I haven't started. I'm just trying to get this set up. Okay. Okay. Anybody else? It's cash that is moving and is not enslaved by tyrants or chains. Okay. So does anybody else want to be in a raffle? I only have 10 people.
There are 14 people watching, and there's only 10 up here. If you want a chance to get in.
So let me know if I missed your name. Futures on silver. I made 100% return on silver. I bought it in right when the market crashed, and I doubled it. It went up 100% in a year. Matthew Plummer. I'm going to do 20. So it covers everybody. Mr. I try every week. I do a live stream, and I'm trying to do 2 giveaways, 2 $20 gift cards. And if I get more subs and make more money, I'll do more live streams. I know people don't do this to make money. They want to learn about stock market, but it just helps get people to watch the channel or get involved. It's more fun. Okay. So every time I hit space, this doesn't count. I'm just showing you how it works. It changes the number, the randomizer. So it's going up to 20. So some numbers, nobody's here. So this is going to be the first one. 8. 10.
Hey, that's me.
You can't win 2 in a row. That's the only rule. If it's 8 again, it won't count. Oh, 8 again. 7. Sometimes I'm not sure if it works. Head to AZ. 1. Neil Weston. I went to school with Derek Weston. Okay. 14. Nobody's a 14. 3. Like I said, try to comment on all the YouTube channels and watch like my playlist. Like put a playlist on and let it run for like the rest of your life. Just let it keep running forever. And comment here and there, so it's not just running. You know, maybe click around so it knows you're not a robot. Okay. Did anybody come in that wants to be part of it? You can still be part of it. Okay. LX. Yeah. Next number. 9. Harris. Last week I paid both people right away, so this is not. I'm not just saying I'm going to give you $20 Amazon gift card. It's real.
Not a scammer.
6. Joe Murphy. He won last week. Impossible Stock News. It's going to change now, the randomizer, but it doesn't count because I'm not doing the Impossible Stock News. But when I'm changing things, it doesn't count. It's only when I'm down here. This is number changer. This doesn't count. I'm just setting things up. He really did. Everybody go to Impossible Stock News. If you like listening to Jewish people talk about stocks like me, you can listen to another Jewish person talk about stocks. And he's really good. He gets a little deeper and he talks a lot about like what's going on in the news. Okay, so let's do another number changer. 7. Ed, I should have wrote this down. Coco won, right?
Yeah, the first one.
Ed A to Z. And there's a way for me to confirm Ed A to Z actually won. So if you try to email me, it's not going to work. Ed A to Z. So email me Ed A to Z. Yeah. Possible stock news. I'll show you. Yeah, watch the ads. Thank you. Yeah, this is Impossible Stock News if you want to sub to him. No, just email me, Ed to AZ. Email me wherever my email is, financial.business.consultant, and just say I won. I know who you are. I wrote down 2 winners. So when you email me, just say Ed A to Z. And then I'm going to email that I'm going to send a $20 Amazon gift card to that email. I downvote every video and report you twice a week. Thank you. That's what I want. Downvote me every video and report me. Now everybody came. When I did the raffle, there was nobody here. There's only 10 people. Now everybody's here.
Yeah, 18, 19.
Is there any stock anybody want to talk about? Well, you do a lot of videos. 33 in the last 30 days. That's about what I do. Like,
what do you think of Ford? Do you think it's too expensive?
oh, I like Ford a lot.
I like it too, but it's very expensive, I would say. I feel like
I'm so stupid because I remember talking to a friend and I'm like, when Ford was $4, like, and I was like, I think I got to invest in Ford, and I didn't. I'm so stupid. I was like talking to him about it and showing him this chart.
I was thinking of it when it was $10, and now it's all the way up to 19.
I think I'm going to invest in it. This is my number 1 stock, Meta Platforms. This is my favorite stock. This is, I hope I'm not wrong, but I want to put more money into Facebook or Meta. This is my number 1. I don't think it's overvalued either. I think that's the thing. If I do a DCF model, and it's kind of my DCFs, like I'll show you with Roku. It's pretty like it's pretty systematized. Like I have a certain approach, so it's kind of easy to follow. I project out the future revenue, and I do that based off of the market expectation. Sometimes I change things around, but I try to keep it simple so where you can follow it. So once I get the revenue projected out, then I have to project the future free cash flows. And I just look at what % of their revenue they converted to free cash flow. And I apply that to the future revenue estimates. So and I have to, the WACC is hard to figure out, the WACC. And I did that for Roku. And I'm coming out with $135 a share. I'm not going to buy Roku, but it is possible I would, if I would really like Roku, like I like Facebook, it doesn't matter what the valuation comes out. Like I'm going to buy Facebook, regardless of what my model says, because that's how much I like Facebook, and I think they're going to grow a lot. So it doesn't matter what. So the DCF is only part of it. It's just a way to weed things out. And if you can just do at least 10% of what I do, you're going to learn how to understand things a lot better. So, and it'll make it easier for you to kind of like look at things. Like it's so like looking at a financial statement or any financial statement, balance sheet. It's like walking for me. It's I've done it so much. So that's, you want to get to that point. So at least you feel comfortable.
Scott, I think Impossible Stock News wants to get on.
Oh, you want to be you want to co-host right now? I don't think anybody does what I do. I just think I just came up with my, like, I feel like kind of proud of myself that I came up with. It was just my own kind of like creation, and I guess you can replicate it, but it would be really hard for someone to do it. Like, it's not impossible. But you just have to be really comfortable with things, because, like I said, it's never clear cut. It's never like when I do a video and I show you how to project the revenue, how to project the free cash flow. Sometimes I change things around based on my understanding of things. And sometimes, like I said, even if the model says the stock is a sell, I might buy it. And if my model says the stock is a buy, I may sell it if I own it. So it's only one tool to help me. The hardest part, like a million times harder, is understanding like kind of like market sentiment and like investor psychology. It would take you the rest of your life. You won't even be close to getting a grasp of that. Well, this is the first time I had two people.
I think you're covering them up. I think you're covering them up with the comment.
This Jordan's really good because he talks a lot. Like, hey, buddy, what's up?
Yeah. Scott, I think I might head out a little bit early.
Okay. Should I take you off?
I appreciate it. I'll talk to you later. I'll get in touch with you.
I'll text you. Okay, I'll see you. Thanks.
Okay, thank you.
Okay, that was good timing. Jordan.
Scott.
Can you hear? Okay. Jordan talks a lot, which is good because I don't talk. It's hard for me to keep talking. It's kind of awkward, but he's natural at that. That seems, which is good. It's good for YouTube. Sundial, he loves Sundial. I might have to buy Sundial just to follow it closer. And you never know.
Scott, is it bad that with some of these stocks?
It's hard to hear you. It goes in and out. What'd you say?
Really, I'm going in now. Hold on. Let me get you on my.
But that was
get you on my
the same thing on your live stream earlier. It kept like, it was real choppy.
That's weird. I watched it live on YouTube and it was totally fine.
Oh, maybe it's my computer. The Wolfie. Yeah, Jordan Belfort.
For Sundial?
30 years younger.
Scott, how's my sound now?
Yeah, that sounds good.
How's my sound now? It sounds good.
It doesn't sound choppy. It sounds good.
Okay, good. Are we talking Sundial now?
Yeah. Somebody mentioned it. So you think Sundial, that's more of a retail cannabis company, right? That's their main focus, retail?
So Sundial is a 3-headed monster, and they're aiming to become a 4-headed monster. The
Four.
three, yeah. So the three heads to this monster currently are their growing business, right? Their actual production, which I call the fluffy green stuff. Other people call it cannabis, but I like to use the term. It's for it's an inside term for myself and my subscribers. So
Okay.
they grow the fluffy green stuff. That makes up about, I want to say, like $15-17 million in quarterly revenue at the moment. Their retail business right now, I think, is about 8 million a quarter, around there. You'll have to pull the latest quarterly report for the exact numbers. And then they have a banking business, an investing in banking business. They do traditional lending, like they give a loan and they get paid back an interest rate, but they also do some hybrid lending models, which I think has some like convertible, equity, those kind of things. But the banking business is really where their current growth runway is. I mean, the fluffy green stuff businesses, like those are okay businesses, but the banking business is where they know that they can just dump money into it and they're going to get a solid return. Within the last quarter, their annualized return rate was 13% on the money that they're dumping into their banking business. So extremely, extremely good. What's weird and what a lot of people don't realize about Sundial is that when you go to Google and you look at their revenue that Google tells you, that is only the two segments of the business, which is the growing business and the retail business. Doesn't include the banking business profits, and I do not know why. All right. So then the fourth head of this monster was supposed to be a company called Alcana, which Sundial was set to acquire. They were supposed to vote on this last week, but the vote got pushed back because it was expected that they weren't going to be able to get enough votes to approve the merger. And I think the reason for this is patently obvious, which was that Sundial's stock price had gotten absolutely wrecked since the announcement of the well, that's not true. It was at the announcement of the merger, I think it was around 60 something cents, like in the high 60s. Then when their recent earnings report came out, the stock went all the way up into the 90s. But by the time this vote was to roll around, it was in the mid 50s. And so because of that, I think the Alcana shareholders were like, oh, we thought we were getting, 70 cents, a share in Sundial stock and not, 50 something. And so they got all angry. But now with Sundial, coming back and raging again, there could be a new vote coming on. I think it's on the 7th when they're going to have that meeting again. And if that takes place, then they vote on the Sundial. They vote on the Sundial merger, and ultimately, Sundial stock is, in the high 60s or low 70s or higher. I feel that there's a good chance that that'll get pushed through. I think it was just simply the Alcana shareholders super angry that they were going to get a bunch of Sundial shares, which weren't worth as much as they thought that their Alcana shares were worth. So that's the story on Sundial, Scott, and just keeping my fingers crossed that this thing rages at some point.
But the revenue matches Yahoo Finance. Did you say the banking revenue is not part of this?
It's not included. So let me pull up that earnings report too. So are you on their Q3 earnings?
Yeah.
Okay, hold on. Sundial growers. Okay, I'm pulling it up right now. It makes me verify that I'm however old you have to be to look at marijuana on okay, news. Okay, so I'm going into the Sundial on their investors page, and I'm pulling up Sundial reports third quarter 2021 financial and operational results. Hey, Scott, as we start talking about this, also pull up their Q2 2021 financial and operational results report, the press release. I mean, what's interesting about Sundial is that they're still growing and they're still making mistakes. And so in the second quarter, they actually collated all of these numbers for us. But in this third quarter, I remember they didn't. So let me go to investment. And okay, so if you scroll down, investment and fee revenue of 3.3 million, realized gains on marketable securities of 6 million, and Sundial's share of profit from equity accounted investees of 9.9 million for the third quarter of 2021. Okay, so that looks like it's another like 18 to 20 million. I did a 41-minute video on Sundial about a month ago, and instead of trying to explain to people what each of these different income streams from their investing business was, I essentially I put it all in one basket, and I called it the blended revenue that's not revenue. So now every time I do a video on Sundial, I'm going to be using the term blended revenue, which is not revenue, according to them.
You sound like one of the executives at the company. That's how everything's like adjusted or blended. It's never what's on the actual statement.
I think it's just a weird accounting issue, because if you're Wells Fargo, right, and you make a loan, and that loan ultimately gives you interest, right, isn't that revenue? I mean, maybe I just don't know enough about the banking business and how they report their revenue and earnings, but it seems really strange.
Okay, so you're saying they provide loans to other cannabis companies, right?
Yes, they're a specialist lender in the fluffy green stuff space.
And they receive principal and interest on those loans. I'm trying to think. YouTube rejected your comment usually means like a spam. What the hell?
Hold on,
Yeah, I don't know. I have to relearn that, how it's recognized. But apparently they don't recognize it.
Is it not going to let me drop this?
I'm not sure why. When did they start providing loans?
I think it was in the first or second quarter of this year. So essentially, Sundial, when it memed back in February, they sold like 1 billion plus shares, right? And so they had all of this money, and they're like, well, what should we do with it, right? And so they bought a retail fluffy green stuff retailer, and I'm sure that they have done other types of equity investments in some of the companies that they hold, but what they didn't do, which I thought was really smart, was they didn't try to expand their growing business in like a way that they would like try to like steal business from other fluffy green stuff growing companies, because I think they saw that as a really tough business, right? The growing business is very competitive. That's what all of the CEOs who get on their conference calls and say, they talk about the extreme competitive landscape. And even the CEO of Sundial recently said it's going to get like, I think he said it's going to get, the blood was going to be in the water in 2022 with respect to the different fluffy green stuff companies. Like meaning some of them were going to be going out of business, and you were going to be able to pick up, some of those assets on the cheap, right?
So you're saying the upstream cannabis market, that's how it is even in oil and gas, the upstream part, like the companies that actually extract the oil, that's the most challenging part. When it gets further, like to the midstream or downstream part, like it's much easier. It's less risk.
Right.
Yeah, that's true. There's a lot of risk when you have to actually produce something, because it costs money and things can go wrong. But once the product is already made, then it's easy. Then all you have to do is just sell it to the end user.
That's right, Scott. I mean, I think you hit the nail on the head. And so Sundial, I don't think they're getting enough credit for the fact that they have transformed this business, because Scott, I mean, tell me if you agree with this. There are things called machine traders out there, right? Like algorithms. And some of the things they look at are things like what comes up on Google for earnings and revenue, right? Or what news articles come out and what those news articles say about earnings and revenue. And so if Google and all these other companies are picking up this, like I would say half of this blended revenue number, then ultimately I think that if that changes and all of it is eventually collated, or for instance, if like a merger with this Alcana business goes through and they've got $180 million ish a quarter in revenue that could come, I mean, that could really set off the machines. Do you agree with this machine trader theory that I always talk about?
Wait, say it again real quickly. The machine trader. You're
Yeah.
saying because they're buying and selling at such a fast pace.
Right. So do you generally agree that there are machines and algorithms out there that scalp essentially the entire internet for information about stocks and make trading decisions like without humans being involved for certain, for certain companies?
Yeah, I would agree with that. Yeah.
Okay. Yeah. So my point of the story is to the extent that like Google and other sources are using bad Sundial revenue numbers that doesn't represent actually how much money they're actually bringing in the door. If that changes, if Sundial can figure out a way to report these numbers in a way that Google picks up, that shoots that revenue to the more of the blended revenue number, that could change the landscape for the valuation metrics of the machine traders almost immediately.
Where does it talk about the interest they received on their loans? Is it in here?
Yeah. So if you control F13 and then the percentage sign, it'll come up. It's right before the chart.
13%?
Yeah. Did you control F13%?
Yeah, it didn't work.
Yeah, I can read it to you.
Is it I'm on the third quarter. I'm on the financial.
Oh, no. Here, hold on. Let me grab it for you. You're on the full
MD&A?
release. Yeah, I always use their news release. I just stuck it in the chat.
Oh, because news release. Don't listen to what the companies tell you. You have to look at the actual financials.
Scott, those charts they're so hard to
They could say anything. They could say anything.
I know, but this is a very complicated business. And
you said in the chat, where is
I just posted it in the chat. It's the last thing.
What chat? Where? Here?
Yeah, on the YouTube. Do you have access to it?
I don't. You mean a chat everybody can see? The scrolling? I don't. It's not there.
It's not showing up?
Do you see it on yours? Does anybody see his comment, Jordan?
Yeah, I'll post it again. Did you get it? I sent it a second time.
Does anybody see Jordan's comment? I don't see anything.
That's weird.
Do you see it?
I see it. It doesn't tell me it's blocked.
The reason I think cannabis stocks don't go up as much as they should is because the big funds just won't buy. And those are the companies that's how stocks move. When those big investment banks or BlackRock type companies, they buy 50 million, 100 million shares for their clients. Like people like us can't really move a stock unless we all get together like they did on AMC and GameStop.
Right.
But the big funds are the ones who really move things. And cannabis stocks, when they first started trading, it was a lot of excitement, but then it just crashed. It kept coming down. Too much government regulation, impossible to compete. I guess if it's legal on the federal level in the U.S., maybe it'll go up. Wait, so where the webcast transcript, does that go to this? Is that what you're looking at?
No. I go to news and then go to like the second or third bullet there. You got to go to the number 2, I think. Is it there? Third quarter release? Yep, there it is. Yeah. So if you control
everybody, don't do what he's doing. Don't listen. Don't listen to what companies tell you. Okay, in the third quarter, the company's portfolio of credit-related investments. Oh, okay, that's right. They're investments. They're not. It'll show up on the statement of cash flows.
It's very weird, Scott, because their banking business is actually run through a joint venture with another company, a 50-50 joint venture. So like the way they describe things, I mean, maybe somebody with your background would know. Maybe somebody with your background would know some of the terms that they're using, but they're very complicated the way that the whole structure is, which I think is one of the things that makes a lot of people really confused with how the company is doing. And so one of the ways that I kind of cut through that is that I use this news release. I also go into their income statements, their balance sheets. I make sure that the cash on the balance sheet is rising. They're a company with no debt, even though that's technically maybe a stretch because they have lease liabilities, I think, which go under debt. But the actual news release, continues to use the term no debt.
So how much money do they claim revenue should be? Is it?
So I think it is that banking business and the growing business and the retail business, which are just those two numbers, right? So it's cannabis cultivation and production was net revenue was 8.2 million, and then let me see if I can find the retail business. Oh, cannabis segments.
Oh,
so yeah, so total for cannabis was 14.4.
Okay. In the third quarter, is anybody following this? Does anybody buy Sundial? In the third quarter, the company's portfolio of credit-related investments generated an annualized return of 13%. Okay, and you're saying it's here? It talks about interest and fee revenue, 352,000.
Where are you?
Interest revenue from investments on the right below the 13%.
You're in that sheet. I know. See, that's the other thing, Scott. This thing is a mess. I don't even try to read this. It looks like hot garbage, doesn't it?
So what are you following? What's your revenue number? Are you
so the revenue numbers that I use, it's like their third bullet at the very top. It just says net revenue from cannabis segments of 14.4 million. It's at the top of the chart. I wouldn't even try to use the charts that they have in here. They make me so angry.
Okay. So you're really bullish. He loves Sundial.
I love Sundial. Scott, type Control F the word net book. They have a net book value, right? Which is what the assets minus the liabilities of 55 cents per share US, and the stock was trading at 52 cents the other day. So they were treating this like a very, very, very bad company. Like the company is doing so badly that they're actually destroying shareholder value when they pulled a profit last quarter. So, there was a lot of people who looked at that, at 52 cents clearly over the last, 3 or 4 days and were like, no, this makes no sense. And they came in and they bought this thing back up to 62, 63 cents already. I mean, I should have known.
This is like giving the stock away. It's like you have no risk if you invest in Sundial because they have almost as much cash as their market cap, and they have no debt.
That's the idea. That's the bull thesis is there, and the bear thesis obviously is that they are, they're never going to be able to justify a price to earnings or a price to revenue that makes sense given the amount of shares that it has. The fact that they are under $1 for too long, they're going to have to deal with reverse stock split issues, which is bearish. I mean, these are the ideas that the bears are putting forward, but in reality, right? If their banking business continues to grow, if even if their cannabis business grows slowly, right? I mean, the business is already profitable, right? Like all they need to do is hold serve or do a little better, and then there is the potential huge catalyst that would happen if you get U.S. legalization, and then you're off to the races. So that's the idea. That's the idea, Scott.
That's what they need. You just look at it. This looks really good. Affirm. Let me see. Affirm.
Yes, a lot of people are super bullish on Affirm, Scott, but I'm not a fan.
The third quarter looks really good.
Let me take a look at their earnings. When did they released? So they had negative net income of 306 million. What do you see that's good?
No, I was looking at they had 365 million of operating cash flow.
I wonder why they're.
But I need to look. I wanted to find the actual financial statements so I could understand why. Is this an American company? It is, right?
Yeah. Scott, what's your morals behind, or like, how do you feel morally about the buy now, pay later deal with these like micro loans?
What do you mean buy now? You mean buying on credit, like buying using accounts payable, accounts receivable?
Well, so Affirm's business is to essentially allow people to pay like on payment plans or pay later.
What are they paying for?
Like you can go on I think they just did a partnership with Amazon. Let me look. Amazon Affirm. So like if you needed diapers for your kid, right? Yeah, so Amazon has pay over time. So if you needed diapers for your kids and you don't have any money in your bank account, then you could go and do buy now and pay later. And then if you get paid next week, then you can still have what you need for your household. But those kind of like micro loans, tend to be very difficult. I mean, and again, I think it's no interest unless you don't pay on time, and then it becomes crazy. But the whole idea is like the people who are ultimately going to be having to pay interest on that is a very vulnerable sector of the population.
Right, and they won't be able to afford it.
Right. And so the question is, how do we feel about being super bullish? I mean, which is crazy in today's ESG world, how retail investors are so hot on this. I don't know why no one talks about it. Maybe it does more good than harm. I don't know, but it's a point of debate.
Yeah. Let me answer Joe's question. Then let's talk about Affirm. So reverse stock splits, pretty much companies do it to avoid getting delisted. So it's generally not a good sign. I mean, it's not like the end of the world, but yeah, it's generally not a good sign. The only time it could be a good sign is if a company wants to go private, they may do a reverse stock split so there's less shares outstanding. So it's like just easier to change from public to private. But in almost all cases, yeah, it's a bad sign. That's why somebody was like, somebody was saying, "Oh, the stock was $500 last year," and I'm like, "No, it was never $500. It was like $3 at one point, maybe." He's like, "No, what are you looking at?" Because of reverse stock split, he thought it was. I made that mistake too, but wait. So sorry. So you're saying Affirm provides loans to people? Wow, Eddie, this is the biggest tip ever. Holy cow! Look at that, Jordan.
Wow. Incredible.
That it's just, even if you gave $1, and I mean that's extremely generous. Even if you give $1, it's just the idea that you would give your hard-earned money, which I appreciate so much. But that's really overly generous. Let me know if there's any video you want me to do. I definitely can do a video for you. I think that's more than all my tips combined for the past 6 months. That is more than everything I've ever gotten. Everybody say thank you, because that's extremely generous. Wait, so you're saying, well, this is Sundial. So you're saying Affirm provides loans to individuals so they can buy things online?
They have a lot of different retail partners, but that's the idea. Yeah. So if we go to Affirm, we'll just wiki Affirm and I'll read it to you.
Their revenue, 111 million. Yeah, I wanted to look at the statement of cash flows because that was. Here's a tip. If you can understand something, if there's one thing you want to spend a lot of time on, spend it on the statement of cash flows. If you could just understand that, I'm telling you, you'll be 100 miles ahead of 99% of the people out there. Because this is the most important part of a business is the cash. Because if you ran your own business, right, who cares about your accounting profit or loss? You want cash to pay your bills. Because I talk about this a bunch of times, but like if you got a lot of write-offs one year, and you like you bought solar for your home, you bought a Tesla, you got all these write-offs. So your net income could look like nothing. It looks like you made nothing for the year, but you end up bringing in more cash than ever. Do a video on Casella Waste, CWST.
So Scott, you're saying that the statement of cash flows could indicate that the company is healthy despite the fact that they put up a net loss. Would the cash balance of the company also reflect that as well, or the assets of the company, would that reflect it as well on a quarter-to-quarter basis?
It usually takes 2 weeks for me to get a video up because I got to get. It's mainly is my wife a write-off? Well, it depends. Straight cash, homie. It usually takes two weeks to get a video up, so I should have it done in 2 weeks because I have to get the thumbnail done. The cash is. Yeah, I'll give you an example. I always give it. Say you say your salary was $50,000. Taxes. Eddie, was there a particular stock that you made money on? There must have been something to give that big of a tip. Was it something you I didn't think it could be manipulated, but it's much harder to manipulate the statement of cash flows. So say you had a salary of $50,000 and you paid roughly 20% of taxes. So your net income, I'm using the income statement terms, but the cash you bring in, like the cash you have in your pocket, is $40,000 for the year. So in this case, if you're going to do a statement of cash flows on your company, it would just be your net income is $40,000, and there's really nothing else. There's no write-offs. So your cash flow is 40. Okay. So say that's last year. Say this year. Say just keep it simple. Say this year, same thing. You got 50,000 from your job. But let's just say, for argument's sake, you bought solar panels for your house, and that cost $30,000 for the solar panels. Even though you got 50,000 salary, you get to write off that 30,000. This is what a write-off is. It reduces your taxable income So now your taxable income is 20,000. So pre-tax income. And you always pay, say, just keep it simple, 20%. You only pay 4,000 taxes because your taxable income came down to 20,000. And so your net income is 16,000. So if we could do the statement of cash flows, your personal statement of cash flows, we start with the 40,000. Well, so no, your net income is 20,000. We'll call it solar panels. Now, how do you calculate statement of cash flows? You start with your net income, then you have to add back the non-cash items or the write-offs.
Scott, you're killing me here. I'm waiting for the big conclusion. What's that final cash flow number?
Did I do something wrong? Only 6,000 more. Okay. So your net income. Okay, I did it right. Okay. Okay. So in 2020, you had net accounting profit of $40,000 and cash flow of $40,000, right?
Right.
In 2021, if you looked at your income statement, it looks like a $16,000 profit.
Right.
So it looks like a bad year, right?
Mm-hmm.
But you brought in more cash. You saved $6,000 on taxes because you paid $4,000 instead of $10,000. So you brought in more cash.
But 30,000 has been invested into the business, into CapEx.
Yeah, I guess in this example you can consider it CapEx.
Right.
But it's not a business. It's not like a revenue generating asset.
Right.
Well, I'm just trying to. I mean, this is on a smaller scale, but
Scott, would the summary here be that if in fact the cash flows for a business were being used for things that would generally be accretive to the business, then that would be a good use of cash flows. But for
usually,
instance,
yeah.
like let's just say you were dealing with an older business that had a lot of machinery, right? And that machinery needed to be replaced just to continue current production, then maybe the cash flow would be less ideal because they're essentially needing to put in that CapEx in order to hold serve. But if they were like, let's just say it was a technology company and they were putting CapEx to start a new app, right? That was going to be an entirely new business, but they could write off a lot of that, right? And ultimately put up a lower net income to pay less taxes. Then the cash flow would be very important there because the cash flow would be a more determinative number for the actual health of the business.
Yeah, I'm just saying. you can't just rely on net income, because if you did, you would say 2021 was a terrible year because they only had 16,000 profit,
Right.
but they brought in more. You brought in more cash flow. I mean, I guess you could make it extreme and say you had $50,000 from write-offs. You had a zero net income, but you ended up generating $50,000 cash flow because you didn't pay any taxes.
Right.
So that's what I was saying. Like, so the income statement, although it is important to look at, how much cash you bring in is the most important part. That's how you run your business on cash flow.
Right. That
I'm
makes
not
sense.
saying ignore the income statement. I'm just saying when people see like negative net income, they may run away from the stock. But then when if you look at the statement of cash flows and you realized they're actually generating lots of cash.
Scott, that might be something that's really important for that stock I did the video on earlier for Veru, because they put up about a negative, like, single-digit $1 million quarter each quarter, but their cash balance remains very strong. So I wonder if that's what's happening to them. Their cash flows are strong from their underlying business, but they're able to, put up that net profit and save on taxes because of their investment in their business. I'm gonna look at that right now.
But it should pretty much equal out over time. Like you can't have negative net income forever because you'll go to business.
Right.
I'm not saying it's only cash flow and that's everything. Because if it's constant, if they're constantly writing things off, that could be a sign of something's going wrong as well.
Right.
But I was saying, like, if you want to understand something well, that's like with Tesla. If you focus on their net income, you would say this is the worst company because every year they lose billions of dollars. But if you see the reason they're losing so much is because they're investing so much back into their business,
right?
And eventually they'll grow to be bigger. But would you say if they bought all that CapEx, they would likely amortize that over a number of years, which would affect net income. Right, exactly. I think if you looked over like a 20-year time frame, it should be pretty similar. But in one specific year or quarter, you have to understand all of it to understand that quarter. You can't look at 20 years of financials to get the whole picture. I mean, you could, but it would take forever. But yeah, exactly. They would have to amortize or depreciate. That's why when we look at REITs, and a lot of REITs have negative net income year after year after year, but they're bringing in enough cash flow to pay the dividends because REITs buy real estate and there's so much depreciation. So they're passing through so many write-offs. So you may look at the retained earnings. Everybody retained earnings, right? It's a sum of all your prior net incomes. And they're running historically a loss, net accounting loss of, millions and hundreds of millions of dollars. So you'd be like, how could they be paying out all these dividends? It's because accounting loss it's like in this example, in this extreme one, if we were to invest in this company, this is your personal, you would say you had no net income. This is a terrible business. You say, that's correct. I had no net income because I bought solar panels, which is going to save me money in the future.
Hey, Scott, I have the Veru unaudited, condensed, consolidated statements of cash flows.
Does this make sense? Or I feel like I wasn't that clear this time. It was better last time. But is that clear, or that makes it more confusing?
No, Scott,
I'll be right back in a minute.
Okay. Yeah, I thought it was super clear, but I am trying to figure out what numbers he wants us to look at in this statement of cash flows. I did a video earlier on the Impossible Stock News channel, and the video that we were doing was on Veru. It's a company that specializes in breast cancer and prostate cancer medications, but also has a phase 3 treatment for COVID-19 for individuals who are severely ill and in the hospital. So I am very proud of my investment in this company. And I added more today because I was super pumped about their fact that they have so much cash on the balance sheet. They have a business an underlying business that generates revenue, and the cash flow from that business helps subsidize a lot of their research and development on all of these other medicines that they're working on. And so, Scott's talking about cash flow as part of this, discussion today. And I wonder, even though this company Veru has put up very low single-digit millions of net loss, the question is whether or not that is really not that big of a deal because of the cash flows. Scott, what number in this cash flow statement do I want to be concentrating on?
But everybody watch my videos on connecting the financial statements. I think it makes a lot of sense when you see it going through all the financials. Ben, is Ben still here? Ben, somebody gave a $100 tip, $100 donation. So if you guys give like $1 or $5 donation, it puts me in such a good mood because it shows you're appreciative. I'm not saying you have to give 100. I'm just saying it does mean a lot. And I'm not even saying you have to give me money or anything like that. But it just shows, because anybody can leave a comment. Don't just. No, I'm joking. No, leave comments too. It's what were you saying?
I was looking at the cash flow statement for Veru, and I was trying to figure out what numbers in this chart that you thought was helpful in the cash flow statement. Like, is there like a line item that we should be looking for, like the label of the line item?
Well, let's just finish up this one. Usually, I think operating cash flow is a much better indicator of how the company's doing than net income. If you were looking at 1 quarter or 1 year, but like someone said earlier, it's going to equal out over time.
Yeah, Scott, I don't see that operating cash flow number.
It's a statement of cash flows. The first part of the statement of cash flows.
Statement of cash flows says operating activities, then it says net income loss, adjustments to reconcile. No, I don't see it.
Yeah.
Yeah, I'm on the most recent 10Q for Veru.
Okay, financial information. Eddie came in and bought us all around it. Yeah, that was amazing. Why can't everybody be like Eddie? I'm joking. No, you don't have to, obviously. How do you find it? There's no like. The 10K just came out.
I pulled the 10Q. Whatever the last one was.
The 10K just came out this month. Oh, right. Veru it's
You
year ends 9/30. Yeah, look at the 10K. That's the best one.
Okay, let's pull open the 10K then. So we control F cash flow. No, that doesn't work. Oh yeah, there it is. Okay, show us cash flows. Consolidated statement of cash flows for the year ended September 30th.
Yeah, net cash used in operating activities. I think that's the best number to look at.
Net
but like,
cash.
of course, like I could tell you 100 ways why that could be skewed as well, but generally that's good. Okay, so let's Affirm. Wait, what does Affirm do? It gives out loans to people. Is that what the main thing?
Yeah. So Wikipedia says. Oh, I have it right here. Hold on.
So it had a loss of 306 million. It had gain on sale of loans.
Yeah, they operate as a financial lender of installment loans for consumers to use at the point of sale to finance a purchase, is what Wikipedia says.
See, this is like one thing that I would say is not a good reason they had good cash flow. So they had a cash inflow of 368 million from accounts payable. So that's the same as taking a loan from a bank. When you buy product from a company, say you sell iPhones. Don't worry that Apple doesn't know about it. So you buy $100,000 of iPhones, right? And then you resell it for $200,000. But if you bought all $100,000 on credit, it would show as a cash inflow. So that's generally not the best. So that's not a positive thing if I see that. If I see something like, depreciation or a write-off, that's the reason they had a negative net income, then that's good. Like I was showing you earlier in the example, just because we didn't have just because according our accounting gain was nothing because we had all that write-off, it was because we invested into our business or we bought solar panels.
Scott, what's the number that we like the most here? Do we want to see big negative numbers or do we want to see big positive numbers in the cash flow statement?
Well, ideally in operating cash flows, it would be positive. So in 2021, this company lost $16 million of cash. And I'm not saying that's it. Don't invest in them. It's terrible. I'm just saying that's generally not a good sign to like go through so much cash. But there might be a reason. They may be investing for growth. Like
Right.
Lots of companies became massive companies because they had to spend a lot of cash. You have to try to understand, and it's pretty confusing. They spent 18. These are actual numbers. Yeah, I guess 18 million. Okay, so they sold one of their business. So this is fine to have negative operating cash flow because you sold the business.
Right.
That's fine. If you have negative cash flow because revenue's down or expenses are up, that's bad. So this looks really good because they had a $7 million net profit. And they actually had positive operating cash flow if you strip out this negative 18 million.
Right.
They sold this business for 18.4 million. do you know why they sold pre-boost? Is it
Hey, is Ben back?
what?
Oh, my thing's on the from earlier. I was like, oh, is Ben back? I didn't see him. Hey, Scott, I am running low on time though. Is there anything you wanted to talk about before I stepped off for the day?
No. Yeah, all looks good. Put all your money into Vero, definitely. It looks good.
I'll keep you updated on how that one rolls out. We're talking 2 quarters. On these the calls I bought were out into July, so in 2 quarters we'll know if that's going to be a profitable venture for me.
Yeah, no, it's a pharmaceutical company, right, Vero?
Yep, prostate cancer, breast cancer, female health, men's health, and now COVID-19 treatment.
All positive things. So it looks like they're doing. This is why it'd be confusing, because I said operating cash flow is a better indicator, but in this case, it's kind of skewed the other way. Because usually you pass through large losses on the income statement, right? Because you may buy something, or but in this case, they sold a business unit, so their net income is artificially high. So they should actually have. They should have a loss if it wasn't for this. So that's not what you want to see when you invest in a company, that they have a net profit because they sold a business unit. I'm not saying it's a terrible thing, but generally you don't grow a business by selling off your business.
Right.
But there could have been a good reason for the sale of this business. If every single quarter, if you see them selling off business units, that's an issue. But once in a while, if you want to focus on a certain area, that it's fine. But I'm just saying they should probably have a net loss.
Yes.
Which
that's right. Yeah.
But it's these pharmaceutical companies are so it's so expensive in the beginning, the first few years, until you get drugs approved. It's like investing in one of those junior miners. Like it's all they lose so much money until they finally get a mine that they can pull from. It's expensive to get to that point to identify mineral deposits.
Scott, to use your example, this company is like your junior miner who's maybe got their pretty good idea that there's some good stuff underground, but they decide to do a bake sale on top of their mine to bring in some cash flow, and it pays for a lot of their the mineral hunting, right?
But this is good. I mean, a lot of times you invest in a pharmaceutical, like a pharma company, and they have no revenue because they're still trying to get FDA approval. They do have revenue, so that's a good sign.
Okay.
That should give you more comfort in investing in them. But
the 120 million plus in cash doesn't hurt either.
Where did they get that from? From issuing stock?
Yeah. So when they announced that they were going to be putting their COVID medicine into the trial process, the stock shot up to like 20, and they were able to raise cash at like 15.5, I want to say, and the stock is currently trading at $6.30. So that cash was raised at a much higher valuation, double plus from where it is now.
Wow. The stock, it looks like it. Wow, it was recently. It was really high. It was over 20.
Yeah, it was over 20 in February. It was like just about 10, I think, like a few weeks ago. Like this thing is, I mean, it just totally, I think, unfairly treated. I mean, that's why, Scott, all I do in situations like this now. In the old days, I used to panic. I used to sell stuff off. When I have the type of confidence that I have in a stock like this, I just add. I add on the dips, and then I try not to look at it until it goes back up.
Yeah. It's hard. It's frustrating seeing your stock go down. But yeah, thanks for joining the stream.
Thanks for having me.
Next Tuesday, since I can't do it New Year's Day, I don't think I'll get many people. And yes, you need to head out, right?
I got to head out. Thank you for having me, Scott, and thank you for always giving the channel a shout out. I appreciate it so much.
Yeah, absolutely. Absolutely. Okay, everybody. I'll see you later. Ben, I got a $100 live stream donation. Did you hear that? That's crazy, right? But yeah, leave a comment. And thanks for coming. I'm going to head out now. Have a good night.